beginner, if I was starting today trading the ES futures, just a few things, three things or so that I wish I would have known, you know, um, before I started trading, pretty much, and I mean, I'm just saying three things, but there's a lot more. So, if I was starting out today trying to trade, trade the ES futures or in particular any futures market, what are those kind of a couple things that I would like? Hey guys, welcome back to the channel. This is Future Trading with Mike, and today we are looking at the E-mini S&P 500 futures. Again, that's the ES futures. Uh, Thank you to those who have already subscribed to the channel. I want to thank you guys. And if you haven't turned on your post notifications, make sure that you click on the little bell icon next to the subscribe button to make sure that you never miss one of the uploads here on the channel. First-time viewers, thank you for tuning in this morning and watching the video. However you found the channel, appreciate that. Go ahead and spend some time, watch the content. I'm a price action trader, guys. I trade the ES futures each and every day, so I'm a futures trader by heart, and this is my go-to market that I trade. So, I just use a basic strategy of taking trades or pullbacks to areas, primarily areas of supply and demand. I like to trade out of. So I'm a supply and demand style trader. So why? Because supply and demand, those are areas where there's significant accumulation of selling or buying that's taking place. So always start off looking at my higher time frames. I recommend anyone who trades, if you're a beginner trader, whatever, always start off with a higher time frame so you can kind of pick a direction of the market. So without further ado, let's go ahead and jump into today's video and take a look. And I did take a trade. I'll show you the trade I took overnight. Well, not overnight, it was at the beginning when the market opened up yesterday. So, in yesterday's overnight session, okay? But let's take a look and see the 60 range chart, okay? I use all range style charts, guys. I'm not just my preference, my preference of what types of charts I use. I don't use minute-based charts or volume or tick. And the range charts are quite similar to the tick-based charts, okay? So, if you use a tick-based charts, then, you're kind of using the same type chart style. Because like on a, say, 12 range chart, which is my go-to anchor chart, there's typically 12 ticks in each bar. So same thing with the 4 range chart, 4 ticks in each bar, or candle. So, okay. So yesterday was the 12th. Today's the 13th, guys, of April. It is Wednesday morning, and it is roughly almost 10 o'clock now. I typically wait 20-25 minutes after the market opens to start, looking at my charts, whatever the case is, or start marking up levels, I should say. But price came down and bounced off of looks like a key area support here, pushed up. That was yesterday morning, okay? Yesterday morning, early hours of yesterday morning, pushed up. We tapped into this area up here, which appears to be, yes, an area of supply here. We bounced off that area there, pulled back. We did break below this area here just a little, so we did swing down to the break this area of support here, which is a low here, pull back, push lower. Now we're pulling back. Into the overnight session last night, early parts of the morning, we didn't really do much, okay? So now we're pulling back to this, let's see here. Pulling back to this low right here and bouncing off of it. But like I said, there is an area of, let's see. Let me take a look right here. Yeah, this was an area of demand down here. The bottom's down here from March the 18th. Okay, the price is rejecting again. So we rejected here, pushed up and pulled back. So that's what I always do. I like to start off with my higher time frame chart and kind of gauge to see is price into an area of demand and area of supply. And then I switch over to my 12 range chart to start seeing the price is going to start breaking structure. So so we tapped into this area of demand right here, okay, off of from March 18th, and bounced out of there, pulling back again. So, we'll see if the market's going to try to break higher, or right now we're kind of moving sideways, so it's in a wedge off the higher time frame. So, it's kind of, in my preference of what I would do, in my opinion, I would be looking for longs, but we could, because we're bouncing off a higher area demand off a higher time frame. I should say an area demand off a higher time frame. So bounce here, you look for price to break structure off the 12 range to the upside, pull back. Okay, but if you look at the overall market direction from a higher standpoint, we're making um, lower lows and lower highs on a chop to the downside, okay, or to move to the downside. So price could definitely push lower, but because we're going to be looking at taking plays off of the demand area from March 18th, maybe we'll kind of maybe look for some longs. So we'll see what happens. Um, let's see. So let's go over to our 12 range chart here and take a look to see what we got going on. All right, so the market opened up roughly around this area right here at 9:30, okay, and made some higher highs, higher lows, pushed to the upside. Um, okay, so price is dead on to an area of um, demand right now off the 12 range. So, okay, I'm going long. Okay, I'm long early on this trade. I know I'm long early, so hopefully we get filled off of this. Move to the upside here. This is the full range. Oops. Come on. I hit my first area of profit and bounced. Hit my first profit target and bounced. Okay, first contract. I'm looking for a little bigger push. Okay, come on. Look at that. It hit it and bounced. I don't want to see that. Okay, come on. I think I'm gonna go ahead and take profit because I don't like what price is doing here. Okay, it can push a little higher here. Definitely so. Let me turn these markers off. I don't want to see those on right now, but that's just showing you the area where I took my first trade at. Just scalping that area. Okay, let me pull up my trade performance. Today is the 13th. Just 8 ticks, right? Excuse me. 8 ticks right there. So I'll show you guys that. Quick little first trade. Okay. Bounce off this area right here. This is area demand. It's probably going to push up to this area up here. So, yeah, there it goes. Okay. So we're in this little low volume node now. Price can reject out of it, but it can also come up here and test this area up here. So be mindful of that. Um, so what I'm looking for is, let's see. Um, Price breaks this area here. We could push a little higher, possibly. Okay, it did break this area here. Okay, pull back. All right. So yeah, come up here and test this area here. All right, no problem. So first trade. Okay. Um, let's see what happens. Price gets up here. Typically where it's at right now. Okay, I'm short. Scalp this bad boy right quick. Could push up a little higher, so I'm in this trade a little too early. Come on. All right. I'm going to scalp this area. Mm, Hmm. What is this thing trying to do? Yeah, should have waited. There we go. Come on now. Look at it. Okay. All right. All right. All right. So I just scalped that area there. Let's see. Whoops. Okay, so I'm up 16 ticks right now. This right here was an area where price pushed up. It let's see here. Trying to see what the market's doing right now. Yes, area up here, resistance sitting up here, pretty much an area of demand in a sense. It's an area of demand off of the full range I'm looking at. So I'm trading a micro range right here, or micro swings, I should say. Price pushing up, broken area here, breaking structure, turns back around, closes, breaks this low right here. On a retracing back up to this area right here. This is your short area, the area to go short, and you can take it pretty much down to this area right here. Just scalped it real quick. Okay, so now we're pulling back. Um, so I'm not sure. Let's see what could happen. Okay, price like it's trying to push lower, maybe. Yeah, maybe trying to push lower. Um, mm, mm. Yeah, it's a little tricky area right here. It's pulling back this area right here. This area right here. This is an area demand off of the 12 range chart. Price pushed down here, pulled back, made a lower low here. Then it pushed up, made a high here, a lower high, and then it started breaking to the upside. So um, yeah, I'm gonna hold off right now. Yeah, I'm just waiting to see what the market's gonna do. They coming out here. Hmm. Because like I told you, since we're in this area of demand off of the demand from the March 18th, um, typically you want to be looking for maybe some buy entries, uh, because you maybe look for some longs because you know to get the rejection off the higher time frame off the area of demand, and then like right here, price tap into the area demand. That red line is that area demand off of the 60 range chart. Price pushes up, pulls back, breaks higher, pulls back. So um, let's see. This is from early this morning, 8:30. Let's see. Yeah, right down here, price pulls back. Um, well, technically, price made a low here, pull back and made a pull back here and push lower. So it didn't really give me the right setup I was looking for. Let's see. But yeah, it did bounce right here. This red line right here, that's the area of that red line marks the area of demand off the higher time frame, that 60 range chart. So when price came down here, it hit that area of demand off the 60 range. It pushed up here. So it made a high, higher low, a high, came back, pulled back right here, closed this candle. You could have went long, you know, and then price got up here, um, and actually made a lower high and then moved and made a lower low here. So then it turned back around, hit the area of demand again, and it started chopping to the upside. So uh, yeah, and once it chopped to the upside here, it pushed up, pulled back, broke higher, pulled back, broke higher. This was your area to go long right here when price came down here at 10 o'clock. And I took that trade right there. All right, let's see what's going to happen here now. Um, boom, boom, boom. Oh, market breaking higher. All right. So, hmm, I was short right there. I missed it. It's all right. It's okay. Hmm. I didn't see price come back down to this purple line. Yeah, this purple line right here. Let's see if we can get that pullback. I'm not saying we will, but this here, yeah, that could have been a short right there. Definitely a short. Missed that opportunity. Let's see. Well, let's see. Yeah, let's see what happens. Okay. Um, hmm. Price kind of is moving sideways here. You can see it here in the 12 range, 4 range right here. Price moving sideways. See if we can take a few. Maybe we can try to get into a couple more trades. I'm not sure yet. Oh, yeah, just moving sideways right here, right now. Okay, it's pushing higher. Just looks like it's trying to push higher. Yeah. Mm-hmm. Quick little stab for a little scalp. Ah, come on. Just scalping real quick. Off the little micro swings. Okay, 20 ticks. I'm just scalping, guys. Just picking up ticks here and there, but nothing big right now. Looking for maybe to come up in this area up here. I'll block it off for you. Just depends though. This area right here, somewhere up in here. It's getting close to that area, but I gotta be careful though, cause yeah, maybe we'll get the break and then the pullback here. I'm not sure. Meaning to break this low right here, and then I'll look for an entry to go short. So I'm still making these little highs on the way up here on this micro on the full range, which is full range I consider to be micro swings. So I don't know what's going to do here because it's ranging. Made a high right here at 44.06. Okay, just going to wait it out. I want to answer a question about someone had asked yesterday about stop loss. Where should I put my stop loss? A lot of people they want to put a hard stop or a manual stop in the market. Um, and that first trade I took, which was right here, it was at basically 10 o'clock today. Okay, let's see what price is going to do. If it's going to tap in this area up here. But when price pulled back to this area of right here, you see this area right here. Okay. Um, let's see. Okay. So I went long like right here. Okay, so price pushed up here, pulled back, made a higher high, pulled back, and then continue breaking and making higher highs, right? On the pullback to this swing right here, okay, I went long when that green candle, when it tapped into this area, rejected where it couldn't break below this little swing right here. When price pulled back to it, I went long. So I waited for the candle to close to go green to go long, right? So the stop needs to be right below the candle. A tick, you can put it right there, a couple ticks, or right there at the end of that candle, but give yourself some room though, a couple ticks below that, just in case, because price sometimes like to push up, then to pull back, it'll set a wick on the candle, and then to push higher. So that's just the way that the market makers try to play that game and stop to run stops and stop traders out. So you got to understand how they work. So put it below your whatever once you get into the market. See off the 12 range. I do a lot of trading off the 12 range, and then also look at the full range as well. But once price pulled back to this area right here, this swing right here, couldn't break below, couldn't take this swing out, rejected it. Rejection was when that candle closed green to the upside. Okay, I put my stop right below that candle there. Okay, if you put your stop right below that candle, you should be okay to be safe. But I typically like to give my stop a few more ticks. Breathing room. It could be 4 ticks below that, whatever the case is. That's up to you. You get whatever you're comfortable with, because everybody's money or capital situations are different, whatever the case is, and risk situations. I should say risk. how much you're willing to risk. But your stop should definitely go below that candle right there. Wherever you enter the market, once you enter the market, put your stop below that area. Once you're in the top end of this candle right here, then your stop needs to go to the back end of that candle. Okay. And as you see, enter here, price push up a little bit, pull it back. See, if you were to put your stop right there below that candle, right here where this wick is of that candle right here, then you're talking about 2 ticks away when price pulled back right here to maybe possibly stopping you out. So give it a little bit more breathing room. So it pushes up, pulls back, and then it continues to the upside, okay? Um, so there you go. So let's see. Um, and if you're trading off the full range, looking for a little W structure, price pulls back, pushes up, pulls back. You get the little W structure right there, okay? At that point, once price gets your little W structure, you put your stop loss right below. This W is a it's it's letting you know that there is a rejection taking place pretty much, okay? So if I look over at my 4 range, my 12 range, and I see price close above, that green candle close above, here in the 4 range, it gives me that W structure. I'm putting my price right below, at the back end of the little W structure, meaning at the bottom end of the W structure. So makes a W structure, green candle, close to the upside after the W structure, you can take it there or you can wait till the pull back to the W structure. But regardless of the fact, once the W structure is formed on the 4 range, you can put your stop loss right below that little W structure there, as a means of a W structure kind of gives you a means of a barrier, a means of support there. So put your stop loss right there on the back end of that W structure there. That's at 43.94. See, same thing here, 43.94. So I trade both off the 12 and the 4, so it doesn't really matter. But same area, this area right here on the 4 range is the same area here, right here, my trade from. I think we had PPI, and then at 10:30 today we had crude inventory. So that's about it for news. All right, let's see. Yeah, this was a short right here. I missed it. Actually, I probably can still get into the short. Let me take a short here. Okay, come on. There we go. All right, short entry right there. All right, picking up 8 ticks right there. So I'm up 28 ticks now. Okay. Back down to this area right here. Okay. All right. So that's where you put your stop at. Once you depict the area where you're gonna take a trade from and you wait for it and you get the rejection, once you're into the trade, your stop needs to go right below the candles, like off this green candle right here, right below it. Okay? All right, if you trade off the 12 range. If you trade off the 4 range and you want to wait to see that W structure forms, once you're into the market, put it right below that W structure. Okay. So just up 28 ticks right now. Market it's just chopping sideways right now. Um, so it actually turned around, pushed higher, right? And made a high, another high, broke back here. I mean, took out this structure right here when it pulled back or um, flipped and turned to the downside here. So it made a low here. Now it's making a pushed up, made a high here. But anyways, on the when it pulled back up to this area right here, where it candle closed, you can go short. And I'm going to show you a trade I took yesterday evening. Where was it at? Let me take a look. Yeah, it was right here. Where was it at? Let me see here. Right here. It was right here. Okay. And the market opened. As soon as the market opened back up, I went short. But anyways, Price had pushed up, pulled back, pushed higher, taking out structure right here, turns back around, break structure right here to the downside, meaning breaking is low. When it retraced back to this area right here, I went short. Okay, the short was right here. All right, and that was yesterday, right at the market opened up at 6 yesterday evening. But I think we may be trying to push higher here. Let me see. Um, mm, yeah, we could probably push. We're trying to push higher. I think we're going to push a little higher here. But we have this area up here, so just gonna wait it out. I like to see price come back down to this purple line. I'm not saying it will right now, but definitely like to see it come down to this area here. So I'm gonna mark that off and see what happens when price kind of gets in this block right here. See what happens. You can see we got a high volume area here. I want to take it right below at the lower edge of it, and then maybe look for a long. So we'll see. Ooh. Whoops. Mm. This right here was a short. Didn't take it. Price push down, pull back, push lower, taking out this structure right here. I'm gonna pull back to this area right here. This is an area of demand. Um, Let me see here. Yeah, I didn't take it. Take the short right here. I should have. Yeah. All right. See what she's gonna do. That's not. I'm sorry, not demand, supply. Right here. Didn't take it. Um, Come on. This area right here. Hmm. Yeah. Let's see. I'm late. Yeah, I'm late here. Ah, price can come back here. I know it can pull back here. Um, yeah, I'm looking for a move to the upside here. Yeah, come on, push up. Um, I should have got in on the pullback right back here, but I'm buying the highs. Well, not say the highs, but buying. I should wait for the pullback. I bought the top end. Should wait for the pullback. So I'm being aggressive here. Uh, oh man, yeah, I need to be careful here because okay, there we go. All right, I'm just noticing now price could actually reject this area right here. Okay, so I need to be careful there. Um, so in this trade here, price pushed up, pulled back, made a higher high here, broke lower, and then it turned back around. Okay, wicked out the top here, making a high, taking its high here out. Then it pushes down, pulls back, breaks lower. Okay, and then you could be probably possibly looking for a short in this area right here. So um, let's see what happens right here. Can move a little higher though. Okay, I'm short. What do you want? Yeah, I probably should do just scalp here. It can move a little higher. 44.75. That's not what I want to see. No, don't do that. I should wait for this candle to hit it close to the downside. Yeah, needs to break lower. Needs to break this area here, 44.05, if it wants to come down back to the B pot. So it can break this area here, pull back, and then push lower maybe. Hopefully it will. Come on. I need to scalp this area here. Oh, no, 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 no. Yeah, see it pulling back now. So I'm in the trade way too early. Hmm. So that last trade I took, Yeah, I'm in the trade way too early. Come on. I should have waited. Keeps coming back down to the V pot. Come on, push a little lower. I'm gonna scalp this, guys, because I'm pretty sure price might get right here and bounce. Okay. All right. Okay. Took on some heat there. Not a good solid trade. I should have waited. Um. All right. So the last two trades, 11. Let's see, 4 is 15, 15, and 8 is 23. Okay. So, all right. Let's see what the market is doing here. Okay. So I'm up 51 ticks right now. All right, so it's chopping sideways right now. It did make a low here, and then it broke higher. That was a very, very tricky trade here. I shouldn't have. I should have waited to. Um, if I was gonna take a short, I got into it too aggressively, but I took some risk on there. Don't follow that trade there. That was not a smart move on my behalf. I should have waited. I was way too aggressive going short versus waiting for the candle to close. I saw this rotation right here at the 4 range, went short, market pushed back up. So I should have waited for this red candle here um, to kind of give me some indication close to the downside, but then it pulled back though. So that was a tricky trade there, and we're trading right around the VPOC. So try not to trade around the VPOC. Okay. All right. All right. So be careful, guys, because we're moving sideways here. You can see it just rotating here, building volume. So we're trading within this leg here. We have um, a high here and then a low right here. And price is moving with trading within this leg. Okay. What I like to do at this point, what I want to do is just kind of give you guys some advice, I guess. If this was me today, starting out brand new, trying to get into the whole trading world. And I was a beginner. If I was starting today trading the ES futures, just a few things, three things or so that I wish I would have known, you know, um, before I started trading, pretty much, and I mean, I'm just saying three things, but there's a lot more. So, if I was starting out today trying to trade, trade the ES futures or in particular any futures market, what are those kind of a couple of things that I would like to have known? Three things I would like to have known before I started actually trading. Um, well, one, uh, how much money would I or do I or would I have? Excuse me, how should I say this? How much money? Um, do I need or should I have in my brokerage account? How much money do I need to start trading with? Is a question that I get so often. A lot of people ask that same question over and over. And that's a tough question to really ask because um, everybody's situation is different. I said this before, capital wise. I mean, um, if I was starting off day trading, I think I would, starting off like knowing what I know today, uh, 10 years ago, I would have like $5,000 in my account at a minimum to start trading because, especially trading the ES, because of the fact is it's one of the lower, well, it is as far as margin wise, you only have to have it's what is it, $400 a contract. So, but the thing about it is a catch to that because the ES is such a thick market and you can get tripped up real quick and get stopped out real quick if you don't know what you're doing. So, the enticement of $400 a contract, only need a few $1,000s, whatever the case is, to trade a contract or two. Well, you can blow your account real quick trading the ES because it's not like some of the other markets that are thinner markets. The ES is a very thick market, and thick markets are very difficult to trade. People think because it's a slow paced market that it's easy to trade. It can be at times, but then during times of consolidation where the market's ranging, you can get tripped up, and you can really do some damage to your account real quick. So, uh, as far as having how much capital or sufficient capital would I say you need to start off trading? Me particularly, I would start off with $5,000 at least, and even at $5,000, I would only trade like one contract until I build my account up. So, I probably wouldn't start trading two contracts until I had at least $10,000 in the account, and so forth. So basically, I guess what I'm saying is for every $5,000 in my account, I'll be trading one contract for every $5,000 in my account. So, just kind of the tick value for the ES is $12.50. It's one of the better markets to trade when it comes to tick value, but it's a very thick market, and you can lose that kind of money just as quick. So you're talking 1 point, which is 4 ticks, you can lose $50 in just a matter of seconds, and that can compound very quickly to where you can take a significant loss even on one contract. So that's, to me, that's just the number one thing that I would say that you would really need to have is sufficient capital. And I'm not telling you you have to have 5,000. I'm just saying for me, if I was starting out trading today and knowing what I know today, I would $5,000 for me. Okay, so number two, is basically having an understanding of how slow and thick the ES market is. That's what I'm saying. I just talked about, you know, um, and that goes with um, just knowing, it's a very thick market, slow paced market. Those people who have traded, a lot of people I hear that they stop trading it because they don't have the patience or the time to be sitting there trying to trade the ES. Um, so it's one of those markets you have to have off to your side, monitor maybe to be kind of just monitoring its movement, and looking for setups from time to time. You know, unless you have a very large size of account, and then one setup, say for instance, one good solid setup may kick off, a lot of profit for you. So for me, I'm a scalper, so I like to look for the setups and get in. There's multiple setups, but sometimes it's just ranging so much to where the market can be consolidating, and then it just takes off in one direction, whatever the case is. But you just have to be mindful, okay? So understanding, how slow the ES moves and how thick the actual market is, when I say talk about thickness of the market, it'll have lots of swings, meaning not swings that are, so like large swings up and down. Um, like a lot of your thin markets will have, like the Nasdaq and the Dow. The ES is a very tight, woven knit market, and that's why a lot of people have a hard time trading. They don't like trading it because of it doesn't have it's not very fluid, where it gives large gaps in price, whatever the case is, and it doesn't move fast. So with it having its short little ranges of making a high, pulling back, making a low, and making a high, it's kind of these little small swings makes it very tight, woven or knitted market, and it really makes it harder to actually trade for some individuals. So some people kind of shy away from it. I like it because it's slow pace. Not because it's so much a slow pace. It's just for me, I can see the setups a little easier. Um, I'm not sure, maybe just because of experience or whatever the case is. But you have to have patience from overall. Patience is really the key to trading the ES. I mean, a lot of people like to trade fast moving markets because they don't have patience. A lot of it trading has to do with your personality. I will say that. If you're, you know, quick moving on the go type person. Maybe your personality is, you like to look at a market that's fast paced moving, maybe you can see the setups real quick. It's moving, it's very fluid. Maybe that's just the market for you. Some people who are very, I guess, who more so lean towards having patience, very patient, because the ES, like I said, you have to have a lot of patience to trade the ES because a lot of people get frustrated because they don't have the patience to sit there and wait on the setup when they can look over it at a thinner market and see lots of setups, happening, whatever the case is. So the ES doesn't throw off a lot of setups during a trade session. So for instance, if you look at today's trade session here, we just been kind of been ranging. You can see we're in a wedge, here. If you can't see it, we're definitely in a wedge right here. You see it, made a high here, low here, trading within this leg right here. So it's just ranging, and the ES does that a lot. Uh, Thinner markets will, break this high real quick or break this low right here real quick, move to the downside. So it is what it is. I mean, it just depends on your personality and what type of market you look to trade. You like to trade, I should say. Okay, and I guess the number three thing would be for me, I'm a very patient a very patient person. So to me, I have no problem trading ES. For one, I like trading ES, like I said, because it has a higher tick value, and to me, it's like I can. Um, I'm not saying make my profit quicker than I would on a thinner market. It's just that I guess it's just a tick value that gets me. Just $12.50 a tick, versus some of the other markets that only pay out $5 a tick. Even though they do move. You can make equivalent to what you make on the ES as well, just as much so on the Nasdaq, whatever the case is. So it just depends on the person. That's all I'm trying to say. Um, Number three, having self-discipline. Self-discipline is that comes with any market, to be honest with you. Um, that all ties into psychology. You have to be a very balanced and have a balanced mind when it comes to trading. Um, you have to be able to see and read the market and understand what the market's trying to do, and not be antsy about clicking on that mouse every single time at any given area that you think is a level. Okay, not every area is an actual level. Not every area is a high profitability area to trade from. So you have to be very self-disciplined and research and understand um, probability areas. It's a low probability, this is a high probability area, whatever the case is. Some areas just maybe scalping areas, whatever could be. So you just have to be very self-disciplined, have a balanced mind, be able to read the market, be able to forecast what I'm really trying to say, forecast what the market's trying to do. So self-discipline, guys, you have to really structure yourself to where you can sit for a period of time and not always have your hand on the mouse, but kind of sit for a period of time. Look out on your chart to see, okay, prices in this area here. Okay, this could particularly potentially happen. You see a rejection, then you basically wait for price to tell you what it's trying to do. Okay, and that's pretty much how I'm just gonna wrap it up and leave it like that, though. So for me, it was all about today. If I was looking back at it, capital, um, you know, having patience, having patience, a better understanding of the ES market. If I was, I guess if I had started trading the Nasdaq or maybe trading thinner market, I probably would have stuck with it. It just depends. I could trade any particular market; it doesn't really matter. But I just stuck with the ES when I started trading. I stuck with it, and I didn't look back. Do I look at other markets? Yeah, sometimes I do look at other markets. You know, I don't just look at this market all day long. I look at other markets, see what other markets are doing. I don't 95. I say more than that. 98% of the time I'm trading the ES though. So, but yeah, and then it's self-discipline. Self-discipline is very important. You have to have self-discipline to be able to trade. Okay, so I'm just gonna go ahead and wrap the video up, guys. I appreciate you guys tuning in today. If this is your first time, hopefully we can gain you as a sub here on the channel. And I'll see you guys in the next video. Tomorrow is the 14th of April. There's no trading on Friday, so remember that. Okay, Friday is Good Friday, so I'll see you guys in tomorrow's video. Take care and have a good one. If you're trading, please be safe in the market.